What is self-employment tax? Each year, when I work with new entrepreneurs, whether they be an independent contractor or maybe a single member LLC, even a partnership, they seem to be taken off guard that their tax bill is a little bit higher than what they anticipated. Usually, the cause of this is self-employment tax. So in today's video, I'm going to let you know what self-employment tax is, when to pay it, how to pay it, and who needs to pay it. But before we get into that, if you're new to me, my name is Timlin Bowens, and I'm America's favorite EA. I'm here to fill the tax literacy gap one taxpayer at a time. So make sure you go and subscribe to my channel for tips on how to fix past tax issues and avoid ones in the future. I'm also the owner of Bowens Tax Solutions in Louisville, Kentucky, and we specialize in resolving taxpayers' issues. Go figure, right? But let's get back to the topic of today's video, self-employment tax. What is it? Self-employment tax is a combination of Social Security tax and Medicare tax. The Social Security part is going to make up 12.4% of your net income. The Medicare part is going to make up 5.9 to total 15.3% in self-employment tax. What does this mean? That means if you net $100,000 in your business, you are expected to pay roughly, not exactly, because there is a little formula in there, but roughly $15,300 in self-employment tax. Now, why is this? So if you've ever worked a W-2 job before, you would notice on a check stub, or even when you looked at your W-2, each pay period, there was an amount withheld for Social Security and Medicare, unless you're a church employee or work for an exempt organization. But that happened each pay period. You didn't have an option. Well, we're in a pay-as-you-go tax system, so when you become self-employed, it may feel like you have an option, but you really don't. The IRS is still expecting you, and we're on the honor system, to make those exact same payments in. But you may be thinking, wait a minute, Timlin, I do in fact remember that, but it was nowhere near 15.3%. That's correct. It was closer to 7.65%, which is half of the 15.3. Now that you're self-employed, you get to play the part of employer and employee. So you're actually paying what your employer paid on your half before. You just never knew that they paid it. What the IRS allows, because you do have to pay both halves now, they allow what's called the self-employment tax deduction. So half of that 15.3 that you're paying, which again is 7.65%, you will be able to deduct on your tax return. But just like any other deduction, you can deduct it because you do have to pay it. So let's take a look at this. If you now have to pay self-employment tax, what does that do to your income tax? And I'm here to tell you, other than the deduction, absolutely nothing. You still have to pay income tax at the federal level, state, and local, depending on where you live, of course. Now, if you live in Florida, no state income tax, don't got to worry about it. But let's stay with the federal, okay? Self-employment tax is in addition to income tax. Your income tax rate depends on how much you make, and then that's progressive. So you'll pay 10% on the first, this amount, and then with inflation, it switches every year. In addition to income tax, you'll pay your self-employment tax. So the only thing that it could potentially do, it may lower your income tax because now you have the self-employment tax deduction. So remember I said we're on a pay-as-you-go system and you're being given the honor system to make sure that you pay that. Now, you're supposed to pay this each quarter. The payments go along with your estimated taxes, which I'll talk about in a different video. Estimated taxes, again, because we're on a pay-as-you-go system, your employer, if you ever had one, they would withhold taxes from your check and they would send that in for you. Depending on the schedule they were on, it may have been quarterly, it may have been monthly, or it may have been every other week. I'm not sure. That's irrelevant here. For you, any federal, state, local taxes that you may need to remit, those need to be sent in quarterly. The first quarter payment is due April 15th. Second quarter is June 15th. Third quarter is September 15th. And the fourth quarter payment is due January 15th. Now, I use the 15th. However, if the 15th falls on a weekend or a holiday, then it is pushed to the next business day. So it could likely be April 18th, like it will be this year in 2022. When you make your estimated income tax payments, your self-employment tax payments should be made at the same time. You can make these by mail or you can make them online. And I have a different video that can show you how to make different IRS payments online. Now, who's required to make self-employment tax payments? Now, this is going to get interesting. I don't know if you've been watching the news or not, but there are a lot of people that are upset that now third parties such as Cash App, PayPal, and those different merchants will be sending out 1099s if a business has made $600 or more. Guess what, folks? You were supposed to be reporting that the whole time, whether you got a 1099 or not. Now they're just kind of telling on you because they have to report it to the IRS. Similar situation with self-employment tax. I have people tell me, oh yeah, I didn't make enough to report. The IRS wants to know about every single red cent that you have made. With that being said, if you have net earnings, so that means your gross profit, which you brought in sales, minus all of your expenses, if that amount is $400 or more, you have to pay self-employment tax on it. Now, I mentioned earlier church employees. Churches are not required to pay into Social Security and Medicare for certain employees. If that's you, once you've made $108.28, the self-employment tax requirement kicks in for you. So remember, self-employment tax is your contribution to Social Security and Medicare. We have 12.4% going to Social Security, 5.9% of that going to Medicare. The difference between that and your income tax is your income tax is based solely on the amount that you made, and it's progressive, and you'll pay different rates depending on your income. Self-employment tax is going to be 15.3% that you pay that same rate if you made $10,000 or if you made $100,000. You do get to take advantage of the self-employment tax deduction, but you only get to take advantage of that because you do have to pay the full amount of the self-employment tax. And do not forget, if you have net earnings of $400 or more, or $108.28 as a church employee, you are required to pay self-employment tax. This amount can be figured on Schedule SE as part of the 1040. Now, I hope that you found this video to be very informative. Don't forget to go and subscribe to the page for more tips on how to fix and avoid future tax issues.